So now we have a trading journal from a stock trader, and he asked us to take a look at his data, and that's what we're going to do now. So he has 414 trades, which is a very good sample size. We should be able to draw a lot of good conclusions. Net return slightly positive, but when we zoom in here in the equity graph, we can see it's mostly around the break even. There was a big drawdown, then he had some good profits, but in the end, it's fluctuating around break even. The win rate of 38% and a 1.2 reward to risk ratio give him a profit factor that is slightly above break even. Of course, that's what also the equity graph shows. So let's see what we can find, and let's see why there are a lot of fluctuations and inconsistencies. So when we go to our chart lab, there are a few areas where we can start. By looking at the instrument, we can see he is definitely a stock trader. He trades a handful of instruments, 13 total. There are two that have a pretty negative performance here, especially XOM, PYPL also. So those are some instruments that don't perform at all. Would be interesting to use here the instrument filter and then look into those trades further to see why they are not performing. Is it a strategy issue? Is it maybe that the system isn't aligned for the specific volatility and market behavior of those trades? But let's keep going for now. We might come back to this. We go to the setups, and here is the first major red flag. A setup called not a play. Assuming those are trades that don't fit into one of his setups, most likely those are random trades, noise, trades that don't follow the rules, or that are just impulsive trades. 121 trades, so a huge sample size, minus 5,000 US dollar. Keep in mind, he only has a performance of plus almost 400. So those minus 4,000 is a huge issue here for this trader. Could turn his trading around completely. So that's the first major red flag. And I would not even worry about at this point digging into why XOM isn't performing. I will keep going down this path here and keep in mind this when we look into more data points. Let's go to the trade comments. He has a trade comment category that he has renamed to psychology. What we have here on the right side is revenge trading, FOMO trading. So revenge trading, only 9 trades, but minus 800. FOMO trades, only 6 trades, but minus 300. So together, more than 1,000 US dollar that he's giving back on just a handful of trades, right? So total 15 trades where he's giving back a lot of money. What we can do, and what I did here when I looked into this the first time, I went to his equity graph, and I wanted to see how this performance would look like when we filter those 3 things out. So we open the setup. We want to select not a play. Then we're going to analyze here the advanced filter, psychology, FOMO, and the revenge trade. And what we're going to do now here is under the settings here is we're going to tick this box. And this means that we're going to exclude all of those tags that we have just selected. So now it says whole performance minus those 3 tags. And look at this. This is a night and day difference. Currently, he would be standing at 5,600 pretty much. Keep in mind, currently he is at plus 400 more or less. And the performance looked break even. This suddenly is an absolutely profitable performance. Still, 288 trades. So we are filtering out around 125, 130 trades, 50% win rate. So half of the trades he's winning, half of them he's losing. But his reward to risk ratio is big enough that suddenly his profit factor jumps to 1.6. In the beginning, he had 1.06. So a huge difference. When you come closer to the 2.0 profit factor, that's when you talk about exceptional profitability. Of course, here you can still see after trade, 170, 175, his performance is flatlining a little bit. But keep in mind, this doesn't necessarily has to mean that after that point he is a break-even trader. It could be that over the last few dozen trades, his mental capital suffered and his psychology was not where it should be. And then even trades where he did follow his plan, he didn't manage correctly or he didn't execute properly. So even trades that are winners and where he followed the plan, that might not have been executed perfectly. So that's always something to keep in mind. We could stop here, we will keep going, but we could stop this analysis here. It's absolutely crystal clear what the trader's problem is. It's trades that don't have a setup, that are tagged not a play, and also revenge trades and FOMO trades. Only 15 trades, FOMO and revenge trades, but look at the difference it makes. Of course, 100 and something trades that are tagged here with not a trade or not a play. This is the big red flag here. Can he change that? His whole trading will shift. Of course, we know from experience this is easier said than done, but maybe the trader wasn't aware of it, how big of a difference it would make. And just think about how much of an impact it would have on the mindset of the trader when he goes from 377 to almost 6,000 in performance or in profits. That will change his whole outlook at trading and his whole behavior and his psychology. That we have seen that time and again. So the biggest thing that this trader needs to understand is his system does have an edge. When he's following his rules, he is making money. When he's deviating from his plan, he is losing money, or at least break even. But overall, the trades where he has not a play, those are losing trades. So sometimes what we have seen in the past, a simple realization, an obvious realization like this, and just looking at equity graph in a different way can make the difference that will help this trader to start realizing he isn't very far away from profitable trading. It is within reach. Then the last thing I want to take a look at is the trade management graph. This is also quite exceptional. Potential performance in light olive green, well above the actual performance. So this line shows how much he actually made, and this is how much he could have made if he hadn't managed his trades. So this is based on a set and forget approach. And the difference here is obviously absolutely clear. So this graph, whenever it's going down, it's mean the difference between those two is increasing. So this red graph or the red line is here are lost by managing. So every time it goes down, it means the trader lost money by managing his trades, and he potentially could have made more money if he hadn't managed that trade. So what this trader could do is look at every time it is going down and find out why he's mismanaging the trades. There's so much more potential. Maybe the trader could also just have a rule going forward. I will stop trade managing my trades. So set stops, targets after the entry, and then don't touch the trade. Do this for a month, 30 days, 20 days, and see how the performance will change. This is the second biggest finding for this trader. Still, the number one priority is making sure that this is becoming a little bit under control and reducing those trades that fall into this category. Once he has done that, trade management could be fixed, but the main priority for this trader is clearly this issue here. He's losing $5,000 by those trades, and that would make the difference between a currently slightly profitable, more or less break-even trader and a potentially very profitable trader.